It's now time for FOMO. Today we are looking at Taiwan Semiconductor, which I think is one of the most important names in the AI story. And today, with a 4.7% move to the upside, we've pulled back a bit from session highs here, but still making a nice move in spite of the overall market collectively being lower, especially as far as tech is concerned. But joining us now to talk more about these earnings and what the street liked now going forward is Caroline Woods, senior markets correspondent for the network. So Caroline, I've always said I thought this was one of the most important names, and I think this earnings event has been hugely encouraging as far as its financials, but not really lifting. It's not been the rising tide that lifts all boats as we've known, but still a standout move today nonetheless.
A standout move, and it might not be lifting the overall market or NVIDIA, actually a key customer, but it is bringing some other chip stocks along with it for the ride. So Taiwan Semiconductor up about 5% today after better than expected earnings, driven in large part to AI chip demand. Of course, that is a bright spot for the company. Also offered better than expected current quarter guidance, which is likely helping shares today as well. So this is the world's largest contract chip manufacturer. Mentioned NVIDIA as a key customer, Apple also a customer as well. Profit rose 57% from a year earlier to a record high. In terms of EPS, that came in at $2.24. The expectation was for $2.16. Revenue rose 37% to $26.88 billion. The expectation was for more like $26.4 billion. Also on the high end of Taiwan Semiconductor's previous guidance, which was between $26.1 and $26.9 billion. Of course, we heard from them last week in terms of the revenue figure, though. Breaking it down by platform, high-performance computer, which includes AI chips, was the bright spot. Revenue there up 58% year over year. Smartphone up 25%, automotive up 4%. Also reported, that better than expected revenue guidance for the current quarter. So now forecasting revenue for the current quarter of between $25 billion and $25.8 billion. Wall Street was looking for more like $24.6 billion. So that's seen as good news as well. In terms of some of the commentary on the earnings call, the company said moving into the first quarter of 2025, we expect our business to be impacted by smartphone seasonality, partially offset by continued growth in AI-related demand. And then the CFO on the call said, we observed robust AI-related demand from our customers throughout 2024. Revenue from AI accelerator products accounted for close to a mid-teens percentage of total revenue in 2024. Even after more than tripling in 2024, we forecast our revenue from AI accelerator to double in 2025 as the strong surge in AI-related demand continues. So a lot of positive commentary around AI. Shares up about 5% right now, up 10% so far in 2025, and 110% over the past 1 year. Only about 2.5% away from the highs. And if you take a look, I mentioned NVIDIA lower today, but we're seeing some other strength in some of the other semiconductor names, Lam Research, Applied Materials, ASML, Broadcom, all higher today.
In its most recent investor update, Taiwan Semiconductor reported quarterly financial results. The semiconductor manufacturing company provides important insights into major business areas, such as artificial intelligence, that have wider implications than just the company itself. Let's take a look. Taiwan Semiconductor stated that it spent $30 billion on capital expenditures in the most recent year, which are investments the company made not only inside or not just in its current region, the core region in Taiwan, but also expanding manufacturing outside of Taiwan. The management team explained that this geographic expansion is in light of the geopolitical tensions and concerns surrounding the United States and China, as well as China's relationship with Taiwan and the incoming administration. Taiwan Semiconductor is investing in expanding its manufacturing facilities in order to diversify their manufacturing base because its customers want it. The politics in the United States over the past 10 or so years have been against outsourcing, against offshoring, and trying to bring manufacturing jobs back to the United States. This is also the case in other countries who also want to bring jobs back to their homelands. They also stated that they anticipate smartphone seasonality to have an impact on their business in the first quarter, which will be partially offset by ongoing growth in demand related to artificial intelligence. Boy, isn't that the truth? You've probably seen a number of my videos about semiconductor companies, and it seems like everyone agrees that everything else is slow. Consumer electronics like smartphones, laptops, and tablets are slow, but artificial intelligence-related products are booming. Taiwan Semiconductor has provided us with additional data to support this trend, and this is the most recent update we have received. The company released the statements on January 15. Therefore, the company is anticipating that, in case investors were worried that the artificial intelligence trend might level off, AI is still booming. According to the company, they guided their first quarter gross margin to decrease by 100 basis points. Revenue is expected to grow by 35% at the midpoint of the next quarter year-over-year, so the good times are expected to continue for Taiwan Semiconductor. They also forecast that their gross margins will increase to 58% and the operating margin will increase to 47.5%. This is from the previous quarter, so year-over-year those margins are expected to decline. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Doesn't seem like tariff concerns or some of the restrictions out of the Biden White House on advanced chip sales to China are really a big of a concern with TSMC. Was that your takeaway, that this AI strength and the fact that they're kind of the best in breed when it comes to this technology and building this stuff, that there isn't really a huge risk factor to some of those other things that we keep reading about?
Well, I mean, I would say not without headwinds because, of course, there are those U.S. restrictions on advanced semiconductor shipments to China, and then President Biden could be imposing some more. Taiwan not on that list, but some of its customers, TSMC's customers, are on that list. And there's also obviously a lot of uncertainty around President-elect's Trump's trade policy. He's obviously talked about imposing tariffs. So there are some question marks there. In terms of some of the commentary we heard from TSMC in general, if you take a look, Reuters actually reported that the CEO of the company said the impact of U.S. controls on AI chips for China was minimal, as there's not that many customers of theirs in China. Also, interestingly enough, Reuters reporting that the CEO of Taiwan Semiconductor will not attend Trump's inauguration because they say that their philosophy is to keep a low profile. So quite a bit different. We've seen other tech executives kind of cozying up to President Trump, donating to the inauguration. It seems like to kind of better their relationships. Doesn't seem like that's going to be the case with Taiwan Semiconductor. But from the commentary that I have seen reported, I don't think that it seems like it's a huge concern of theirs right now, but it's certainly a question mark, especially heading into the new administration. And, of course, if you take a look at the Wall Street community, despite the fact that it has seen this impressive run higher, and as I said, only 2.5% away from the all-time highs, 94% of analysts still rate this name as a buy, the other 6% in the hold camp. The median price target is $239, though, so only about 10% upside from current levels, which is still, an impressive run higher. But considering it's already done that in January, we'll see if there's any adjustments to price targets and whatnot. So certainly some question marks, some potential headwinds. They talked about seasonality in terms of smartphone, AI, obviously not the only segment, but when it comes to that AI demand, very much making the case for continued strong demand this year and even beyond.
It's not efficient for us to be producing outside of our core country, but we're willing to accept lower margins temporarily in order to decrease concentration risk of our manufacturing. In part, this is due to the start of manufacturing in overseas facilities, and management has discussed how we will diversify our manufacturing because that's what our customers want. This is a strategic decision Taiwan Semiconductor is making, and they're willing to do this to ensure that their business has more durability and anti-fragility. If you've read Nicholas Nassim Taleb's books on anti-fragility, you'll know that this gives the company more anti-fragility because Taiwan Semiconductor has other options to facilitate manufacturing outside of Taiwan if tensions between Taiwan and China increase. They estimate that the precise impact of expanding their overseas manufacturing facilities could be between 2 and 3%. And that impact will be more noticeable throughout the year as their facilities in Kumamoto and Arizona ramp up. Additionally, inflationary costs, such as higher electricity prices in Taiwan, will have an impact on their gross margin by at least 1% in 2025. There is a lot of pressure on Taiwan Semiconductor's margins in the near future. However, I didn't see that here, and I was hoping that Taiwan Semiconductor would raise the prices they charge their customers because they are facing cost pressures and demand is so high that they are producing at almost full capacity. This would seem like a good opportunity for Taiwan Semiconductor to go back to their customers and say, "Hey, we're going to increase prices by 5% or 8% or 10% to offset some of these headwinds in our cost." But I have heard some discussion about it. They have pricing power and the ability to raise prices right now, but they are strategically choosing not to, which is interesting. I won't sit here and say they should because they know how to run their business better than I know how to operate mine, but given the factors and market demand, I thought they might or still will in the next quarter or two. I want to say that 2 quarters ago from Taiwan Semiconductor, and then it quieted down. I didn't hear much talk about that in the current quarter in this current conference call, so I'm curious. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
And I totally agree with you because I think it was difficult to find something not to like within this report. I mean, if we were lower today in shares, I would have been just so lost because as far as like their revenue mix, even I think has become more compelling. Like they're seeing the more and more, growth substantially in the high performance computing, but also that makes up more of their revenue now. So I think a well-managed company definitely focused on what's been doing well. But it's just so surprising to me that I not to bring NVIDIA into the conversation, but I mean, this is one of the greatest reads on, I think, the health of so many of these other names, like Qualcomm's chipsets, Apple's iPhones, NVIDIA is another one, but NVIDIA is still lower today. So what gives in a sea of green and some of these semi names, actually, NVIDIA is a standout here, Caroline.
Well, there are the kind of question marks too about the additional export controls from President Biden before he actually leaves office. Jensen Huang has actually called them unprecedented and misguided. So there is that kind of cloud of uncertainty overhanging potentially the stock. I mean, I think too with NVIDIA, it's obviously had it hasn't been a standout performer in 2025, but if you take a look, it's only about 12% away from the highs and still up 140% over the past 1 year. So, can't rule it out just quite yet, but yeah, certainly not a beneficiary of the strength that we're seeing in TSMC today.
Given these obstacles, it's possible that they're waiting for the manufacturing in these other areas of Kumamoto, Arizona, to fully ramp up in the second half of 2025 before implementing a price increase. However, I believe that Taiwan Semiconductor is due to implement a price increase. It's a question of when, not if, they raise the prices they charge their customers in order to continue forecasting a long-term gross margin of 53% or higher. This is interesting because in the most recent quarter and the one that will follow, they're projecting their gross margin to reach 58%, and their margins have been significantly higher than 53%. Because these headwinds are affecting the company's expenses, management is predicting that its gross margins will continue to face challenges for the foreseeable future. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.